Most people hit a moment in their financial life where nothing makes sense anymore. You work hard, you save something every month, you avoid dumb purchases, and you even invest with discipline. Yet every time you open your account balance, the number looks painfully small. You start to wonder if all your effort is just keeping you afloat instead of helping you grow. It feels like the whole system is designed to exhaust you long before you ever get to see results. But that feeling frustration, impatience, doubt isn't a sign that something is wrong. In reality, it's proof that you are still in the hardest stage of wealth building, the beginning. And the beginning is always slow. Building wealth works the same way as trying to push a car that's completely stopped. At first, you push with everything you've got and the car barely moves an inch. You push again and get almost nothing. And then, just when you start thinking it's pointless, the wheels begin to turn. Slowly at first, then a little faster, until the same amount of effort suddenly produces 10 times the movement. Your money behaves exactly the same way. Everyone repeats the phrase, "Your money will eventually work for you," but few people explain when that actually starts happening or why results only accelerate after a long period of consistency. There is no magic switch. Progress comes in phases, and each phase changes the way money responds to you. To understand this, imagine the famous rule of 72, which shows how long it takes your money to double based on your return. At 12% a year, your money doubles in about 6 years. At 8%, it doubles in 9. And at the beginning, when your capital is small, the growth is barely visible. You save $200 this month, maybe $300 next month, and it looks microscopic compared to your effort. And that's exactly where most people quit, not because investing doesn't work, but because the early results move slower than their patience. Someone with $10,000 invested at 12% will earn around $1,200 after a full year. It's not impressive, especially compared to the effort required to save that $10,000 in the first place. But that first stage is never about big returns. It's about building the foundation, because without a foundation, nothing meaningful happens later. In this initial stage, you are the engine. Every dollar of progress comes from your hands, your choices, your discipline. You're depositing every month, organizing your expenses, resisting impulses, and doing all the heavy lifting. The money itself hasn't started working yet. You put in $500 a month, you end the year with around $6,000 saved. And yes, it grows, but so slowly that it barely feels real. And then quietly, something begins to shift. There's no notification, no milestone badge, but one day you look at your numbers and realize the balance is growing for a different reason, because your money finally gained enough weight to move on its own. This brings us to the first turning point in your financial life. The moment your annual investment returns become bigger than your annual contributions. Before this point, the only reason your wealth grew was because you were adding fuel to the fire. After this point, the fire feeds itself. Imagine you've accumulated $51,000 and earned 12% a year. That's roughly $6,120 in returns, more than the $6,000 you contributed through the year. That moment changes everything, because from that point forward, your wealth grows even during months when you contribute nothing. It's the first time your money starts behaving like a separate system, not just an extension of your paycheck. Your risk goes down, your sense of control goes up, and for the first time you feel like you're not doing this alone. Then comes the second turning point, the one most people secretly dream about, when your investments produce the same amount of money you earn from your job. Imagine someone who earns $4,000 a month or $48,000 a year, and has $400,000 invested at a 12% return. The money now earns $48,000 a year on its own. For the first time, your wealth is working at the same pace you are. Half of your income is coming from your effort, and the other half is generated silently in the background. Wealth stops feeling like a number on a screen and starts behaving like a second career, one that never gets tired, never asks for a raise, and keeps producing value no matter what mood you're in. That changes your relationship with work itself. Job stress starts losing its power. The fear of being fired fades. Options appear. You no longer live at the edge of urgency. You start to breathe. This stage isn't about luxury. It's not about buying everything you want. It's about something much more valuable: the ability to choose how you spend your day. When your investments earn as much as your labor, your job becomes a choice instead of a cage. You can take a break without destroying your finances. You can leave a toxic environment without panicking. You can say no to dumb projects that drain your time. Life becomes quieter, steadier. Problems still exist, but you no longer face them from a place of desperation. You face them from a place of stability. And that alone feels like a form of wealth most people never experience. Then comes the third turning point, the one people associate with financial freedom. When your investments can cover your entire cost of living through a safe withdrawal rate, usually around 4% to 5% a year. At this point, the game changes completely. Imagine having $1,250,000 invested and withdrawing 4% a year. That gives you $50,000 annually without touching the principal. Your wealth becomes self-sustaining. You could stop working tomorrow and your lifestyle would continue indefinitely. And ironically, this is usually when people stop wanting to quit work altogether because work, without pressure, becomes something different. It becomes creative, meaningful, optional. You no longer trade life for money. Money starts giving you life back. This stage reveals the real power of compound interest. Even if you stopped investing altogether, your wealth would continue growing. $1 million at 12% doubles in roughly 6 years without any additional contributions. The early years feel painfully slow, but the later years are shockingly fast. That's why wealthy people often say compound growth feels like magic, even though it's just math happening long enough to look like magic. The real tragedy is that most people quit right before the acceleration begins. They give up during the slow part and never stay long enough to witness the curve bend upward. Take the story of Ronald Reed, a janitor and gas station attendant who never earned a high salary, never had financial privileges, and never tried to time the market. He invested consistently in solid companies, avoided panic selling, and let time do what time does best. When he passed away in 2014, his family discovered he had accumulated over $8 million. He didn't win the lottery. He didn't start a business. He simply stayed in the game long enough for compounding to show its true face. The beginning was slow. The end was extraordinary. His wealth wasn't built on brilliance, it was built on patience. So if you're in that early stage where everything feels slow and exhausting, don't quit. Don't confuse slow with broken. Every dollar you invest is building the base for those turning points. There will come a day when your returns pass your contributions, then your returns match your income, and eventually your returns cover your entire life. Wealth isn't about speed, it's about duration. And the only people who achieve it are the ones who keep going long after it stops being exciting. If this opened your eyes to how real wealth is actually built, go watch our last video. I could only recommend one money book. It's this one. It explains the mindset you need before any of these turning points can ever happen. Trust me, it connects perfectly with today's lesson. See you there.